Hey everyone, welcome back to yet another video. This is Spectre here, and today I wanted to dive into the importance of market context and why it needs to drive our trading decisions, types of trades we're taking, how aggressive should we be, should I be more kind of neutral to slightly bullish and take, vertical credit spreads, should I be just aggressive in buying straight calls, yada, 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 whatever, okay? And the reason I'm talking about this and wanted to make a video on this is because, to be honest, I am almost this move up since the low of the end of October to now, where we're all of a sudden at the all-time high, has been rather jarring to me personally. Just some quick backstory on myself. I started trading in the bear market of 2022, to be more specific, in August, right? August of 2022. And I was right around when Powell came out and said at Jackson Hole, yes, we're going to keep hiking rates. It's going to hurt. Sucks to suck. Inflation is bad. This is our focus. And the market just absolutely dropped down to the low, which was around 348 mid-October. And then, since that point, we had just, I don't know, I'll call it bear market shenanigans that continued, right? We had this choppy move up, right? Low volume. Can't really lean on the daily because it's like up, down, up, down, up, down, 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 right? Interesting. Last year in 2022, we had pretty much zero Santa Claus rally. In fact, Powell came out on December 13th wearing the Grinch costume and said, sucks to suck again. And look at that. The market dropped a shit ton. So very different from the trading conditions we're in right now. And that's important to think about because market context, right? Obviously, we've had an insanely bullish move up, and it's like pick any stock you want. It's probably going to go up in the next day or two because the market is on a fucking rocket ship up. And it reminds me of something I read from Harry, or maybe heard from him in one of his videos, where he said, trading in 2021 in the bull market, you could just put a bunch of random tech stocks on a dartboard and tie a blindfold on yourself and throw a dart. Whatever it lands on, just buy it. It'll probably be up 10% in 2 weeks or so. Why is that? Well, let's go back to that time period. What was the market doing? It pretty much just went straight up with virtually very little to no retracement. You had a retracement? Okay, buy the dip, 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 buy the dip. That's all people knew. And a lot of traders were born in 2020, 2021, and that's all they knew was buy the dip, buy the dip. The fucking market only goes up. And then the bear market began. And it made a lot of people realize they don't know how to trade because buy the dip is not the only thing you need to do to be a successful trader. Oh, no, 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 no. That is not the case. And by the way, sorry, I made this shitty meme earlier and I wanted to show it. Yeah, I am grateful I was born in the bear market because it was the hardest of trading conditions to learn in. And I'm extraordinarily grateful for that because the market context was just all over the place. And trading conditions were seemingly constantly changing all the time. It wasn't just things are rosy and the price action shows we only go up. It was all over the fucking place, right? And now we have this just consistent grind higher with virtually no pullback. And to me, it's like, holy shit, like I've never just like felt like this while trading. It's like everything I buy, it just goes up. My win rate is the highest it has ever been before. I'm taking so many more trades and being more aggressive. And it's like, should I start sizing up? And I was thinking about that earlier today, and I'm like, well, sure, I could size up if I really wanted to and felt like, I'm comfortable doing so. But I have to remember the market context right now is extremely bullish. Is it going to be like that in a month? I don't know. I'm not going to pick a top. Please don't pick a top. That is fucking stupid to do. You're going to lose a lot of money. Does this mean I am bearish? No, I am not bearish. I am very bullish right now. But at some point, this market is going to end up, I don't know, maybe it's going to compress a little bit or pull back a little bit, be in a more tight range for a longer period of time or whatever, because this ginormous move up won't last forever. Why is that? Because stocks don't go straight up and they don't go straight down, right? Like for instance, take a look at this, right? We had this move from early June to the end of July where we had this really, really nice bullish move up. Then what happened? Well, then all of a sudden we had this pullback during a more seasonally weak period of the year for the market, right? 3 steps down, 2 steps back. 3 steps down, 2 steps back. 3 steps down, and obviously now we're at the point of just extreme bullish move with no steps down whatsoever. But trading here was very different during this time period than say trading during even this time period, right? Because guess what? If you were buying the dip, right? That would have worked out well during June to July, right? Because guess what? Dip, buy it. Dip, buy it. That would have worked and you would have been profitable and that would have been awesome. But if you tried it here during this period of late July to the end of October, guess what would have happened? Okay, we just had a dip here. Okay, maybe that was a bigger dip than expected, but buy the dip because it worked here. And I remember trading in 2021, buy the dip worked. So buy the dip. Okay, maybe you make some money and then, oh no, nice move down. All right, well, I'm going to buy the dip here because surely we can't go lower than this, right? Oh, yes, you can. Now, obviously, the market context was different then than it was here. And well, why is that? Because the market context is always changing. The market is always adapting to whatever news or, I don't know, things that it perceives to be coming in the future or whatnot. Who cares what that is? We just follow price action. We trade that. But just remember, as I was saying earlier, that this move up won't happen forever. And I'm not saying that we're going to get a big pullback. We just might see some more compressed ranges for, I don't know, some kind of time period. Hopefully, it is nothing as dreadful as this period was from the very early stages of April to the end of May, where we literally went absolutely nowhere. Just horribly tight intraday ranges. This was a very not fun time to trade. It was hard because there was not any market tailwind whatsoever. We were also coming out of this scary moment in March where regional banks were collapsing, and it was like, all right, well, are more banks going to collapse? Is this going to be a 2008 event? Are there more serious credit concerns? Is this going to spread to larger non-regional banks? I don't know. And that was part of why this period was just so not going anywhere. We also had the debt ceiling default shenanigans where people were like, holy shit, is this going to actually be the time the US defaults on its debt? Yeah, there were a lot of reasons to still be cautious here and, not consider the bearish case, because it was like these bank failures back in March, we could still see some out several months from that point. That's supposedly what happened in 2008 prior to the collapse of Bear Stearns and Lehman Brothers. I can't remember the bank, but some bank collapsed earlier in 08, I believe, and it took months for the others to start tumbling as well. Anyways, I'm perhaps getting a little bit off track here, but the point I wanted to make was that we really always need to be mindful of the market context, because the market doesn't go straight up and it doesn't go straight down. Yes, enjoy the gains and this really nice rally up we have right now, but just remember that at some point market conditions are likely to change and adapt to whatever it is that is happening in the future. So don't just think that you can buy the dip forever, because, well, you already know it doesn't work, because it didn't work here, or excuse me, it worked here until it didn't. And it sure as shit worked in 2021 and absolutely did not work whatsoever during 2022. And you know what, let me go to a daily chart during that time, because I think it's more fun to just look at how insanely volatile it was. Because, I mean, just look at this shit. This is crazy to look at. And like I said, I'm very happy to have been born during a period, or excuse me, born a trader during extreme volatility, because it taught me a lot about how to trade and how not to trade. So anyways, before I end this video, I wanted to actually share a comment that I remembered Pete saying back in June when we had sorry, I should say back in June of 2023, earlier this year, when we had this nice bullish move up where buy the dip could work. And we had a more sustained period of buying pressure to the upside and the market was making nice moves. So let's see what he said. And by the way, this was a turning point personally for me in my trading. I remember reading this comment and I was like, I am not going to be the trader that he is talking about here. So thank you, Pete, for saying this, because this really helped me turn my trading around. Okay, let's read the quote. Pete, so here's what's going to happen. If I had a nickel for each of these, just watch, because those traders will not have read this. A couple of weeks from now, you're going to hear this. I thought I had this figured out. Earlier in June, I was crushing it, and now I just gave it all back. So frustrating. I don't know what I'm doing wrong. Then I asked them, what changed? I'm desperately hoping for the right answer. Then they respond, I don't know. The damn market changed, you knucklehead. You had a nice window where the market rallied hard, and it was easy to buy stocks. Does that sound familiar? Yeah, it does. Kind of reminds us of this move. Okay. Now the market's digesting gains and it's trapped in a range. You no longer have that tailwind and you had to adjust. Don't be that trader. Again, I don't know when this move is going to eventually lose rocket fuel or whatever, and I'm not saying it's going to drop. It might not drop at all. It might just compress for a bit and then we just might be off to the races again. Who knows? But just remember that market conditions can and will always change. So don't expect that you can just stay as aggressive and be more lenient with your trades as you are right now come some time in the future. Remember this quote, or sorry, this comment. This is so critically important because, again, that was back in June when we had this nice bullish run up, and that didn't last forever. Then we had this move down, and buy the dip certainly wouldn't have worked out very well for us had we been continuing that strategy here, which we weren't because we were adapting to market conditions. So anyways, this video is getting a little bit longer than I wanted it to, and I'm probably just rambling the same shit at this point, but if there's anything you got out of this video, hopefully it is you remember this quote or this comment here, and you remember market context, and use that as a reminder to yourself that the market does not always go straight up. Don't just assume you can buy the dip or just buy whatever you want and make gains and be happy, and that means I've got this figured out, because just right now the period is extremely bullish and you can pretty much get away with doing whatever you want to do, and it will mask bad habits. Because if you're adding to losing positions right now on the basis of, oh, the market's going up, or, oh, stocks just seem to go up right now and adding to losers is fine because they're going to go up, guess what? That's probably going to work. But it might not in the future. As in, it won't when conditions do change, at whatever point. So anyways, hope this is helpful and you stay always, always, always mindful about context, market context. See you guys later.